Hi everyone, and welcome to another update on crypto arbitrage trading. Not much has happened since I've recorded the last bit. We are trying to capture the convexity of the ETH/USD contract. So we were fully hedged when all this started, and then the price has departed from the level where we have purchased. So we have departed from 128 ETH, and we are now at 172, and we are perfectly hedged for the price around $130 per ETH. However, the more the price goes up, the more long we become. So at 172 we are short 324, so $360,000 XBT. So we are short 360k, but we are long 500,000, almost 500,000. So we have entered a trade which was pretty much free with this funding, where upon the increase in price of ETH, we are now long $140,000 pretty much for free. So if the price goes up, we benefit a lot. If it comes back down, then we don't benefit at all. But if it just continues sinking down, then we'll benefit the more it departs from the original price of 128, be it up or down. We'll benefit on that. So we have only made 2 Bitcoin on this trade, which is not too bad, and we'll see how it goes. So as long as this funding stays this way, and as long as I don't see another good market opportunity, we'll just stay in this trade. There isn't any particularly good funding here. The futures here, so this future is probably slightly overpriced, just a little bit. I wouldn't expect normal premium, and this is probably significantly overpriced. But at some point this might actually turn out to be a normal premium for a September contract. I believe at the moment it's not the right price, but I actually expect the premium on the future to be around 10% in a normal conditions, in a normal mainnet. So yeah, that's pretty much it. Not much funding opportunities elsewhere. No good premiums on Bitcoin 1, Bitcoin Yuan. Fine, so we'll take it from there. Thanks for watching. Hi, here is another update on the arbitrage account. I have left it unchecked for a while, and I was a bit surprised to see that we had a few liquidations. So because I had 3 legs of these positions, I wasn't exactly aware where the liquidation lies. In a 3-legged position, it's really difficult to gauge that. And I wasn't expecting it to be so close. The liquidation was at 7.8k, and partially because the contract for which future is that? That is Bitcoin M20, which is the June. That's because this contract was trading at a huge premium. Well, at least a premium which I consider huge. So we got liquidated at 7.8k. So that's the fill from, when was that? 23rd of April. And then we got another liquidation on the ETH XBT, so that's our arbitrage where we were long. So that's a bit weird, but it got liquidated pretty much at the same price where we are now. The second liquidation happened most likely because the first liquidation has eaten up all the funds on our account, and then the other liquidation was only a matter of time, and then we were left with the runner, which was this winning position. So because this position has been winning and because our account has further increased in value thanks to this winner not being dragged down by the losers, and we don't have the capacity to hedge this position because this position has been such a winner, the unrealized P&L is 26 Bitcoin, it's most reasonable to actually just exit this position. So how about we put reduce only, post only, and try to exit this slowly from the market and take all the profits that are due. So we have 20k, that will require around 20 orders like this, and it's reduce only, so it will not overshoot. Hopefully this will all get filled. At some point I suspect that this will push the premium down, but hey, what can you do? So we have 20 active orders, and this is good. This will close our position, and this is our short. Oh boy, so we are short on a position which trades at quite a premium, but honestly there isn't much trading activity going on here. So yeah, we can just hope for the best. So let's put it at 7k. Now if we put a buy, reduce only, will someone post an order just in front of us? I think that's quite likely, so how about we make that a hidden order? So post only, hidden orders do not display on the book. Why is this grayed out? Maybe reduced only, post only. Okie dokie. Hidden, reduce only. Fine, we can pay these fees. We just need to get fields. Fine, so at the moment we are exiting all positions. I don't see too many opportunities. Oh, actually, this is a massive opportunity. But first we need to exit. What on earth is happening here? I didn't know that the perpetual can hit such a negative value here. Whoa. I thought that the limit is at 375. So it's worth to go long on this contract. Well, we have a long in ETH/USD. Fine. Well, first we need to exit this position and then we'll think about this long. At these prices I would be inclined just to go YOLO long, but we don't have too many available funds. So if we go long, then we'll get liquidated at some point. If it goes down, if it goes up, we'll be winning and we'll be having the ETH/USD position filled. So it's not particularly great. We can take this risk. Yeah. So the amount of the cost is 0.25 BTC. Sorry, not BTC. Fine. Because of the funding, I just cannot leave it like this. So let's remove post only and let's just grab this chunk of liquidity. And let's see what happens. I mean, at this funding, what could possibly go wrong? Worst case scenario, this will get liquidated. Fine. So it's 18 and the liquidation is at 6.3k. Well, that's not entirely correct. Actually, let's buy this as well. Fine. And we have we instantly made some gains. The mark price is 7610. So we have not made big gains by just entering this position because we have paid some fees. Anyway, this position will get liquidated if we go down. Fine, I think this wraps it up. Thanks for watching. Please like, comment and subscribe. Please have a look at the links below.